time now for some business news. And for that, I'm joined here in the studio by Kate Moody, our business editor. Kate, we're returning to that US-EU summit earlier this Tuesday in Brussels, and a resolution, of course, to the long-running trade dispute.
Yeah, the European Union and the United States announcing a breakthrough in this 17-year-long spat over Airbus and Boeing. It's been the longest-running trade fight in the history of the World Trade Organization, which had itself given the green light for both sides to impose punitive tariffs. The two sides have now agreed to suspend the duties for 5 years while they work on a permanent solution. The UK, which is involved as a former EU member, said it hopes for a similar deal with Washington in the coming days. Emerald Maxwell has the story.
It's the world's largest corporate trade dispute. A 17-year-long transatlantic tit-for-tat over aircraft subsidies to US plane maker Boeing and its European rival Airbus. Now a 5-year truce between the United States and the EU has been agreed as they work towards finding a more permanent solution.
This is the longest trade dispute in the history of WTO, so it's in our common interest to solve it.
After years of accusing each other of illegally subsidising their aircraft manufacturers, the challenge now will be agreeing what kind of subsidies each can provide as Boeing and Airbus recover from the pandemic. In 2019, under then-President Trump, the US began imposing punitive tariffs on $7.5 billion worth of EU imports. The bloc retaliated the following year, with $4 billion in duties on American imports, after the WTO said that both sides were in the wrong. Tariffs were slapped on a wide range of companies, from winemakers in Europe to spirits producers in the United States, before being suspended in March pending talks. But the Airbus-Boeing dispute is just one of the ongoing transatlantic trade issues. Talks are continuing to resolve a separate row over tariffs on steel and aluminium exports.
Well, both Airbus and Boeing have welcomed that deal as a step towards a more level playing field and one that will allow them to better compete with growing competition from China. U.S. industry unions followed suit, saying the truce would protect jobs in their industry. The aviation sector is struggling to recover from the pandemic, and negotiators will now have to agree on what state subsidies are going to be allowed on each side. There was similar relief from European food and drink producers, whose products will no longer face 25% tariffs when sold in the U.S., but Trump-era tariffs on European steel and aluminum remain in place, as do the retaliatory tariffs on American whiskey and jeans, among other products. Those industries are calling on the Biden administration to continue its work to reset relationships with trade allies. Another outstanding trade issue is the threat of still more American tariffs against EU member states over their plans to tax digital giants. That dispute could be addressed in the ongoing talks about global tax reform. U.S. retail sales slumped in May after 2 straight months of gains. Retail spending was 1.3% lower than in April, as Americans spent more on services like restaurants and travel rather than goods. Overall, consumer spending does remain strong, and retail sales were still 28% higher than they were last May. But analysts say it's not clear how long the recent spending spree will continue. The electronics and automobile sectors are facing shortages of all important microchips, and global supply chains remain strained. Let's check in on the day's trading action. Investors are already looking ahead to the U.S. Central Bank's policy announcements, which will come tomorrow after a 2-day meeting. The Federal Reserve's stance on inflation will be center stage. Wall Street has closed lower just a day after the S&P 500 and NASDAQ each hit record highs. The tech-heavy index there down nearly 0.75 percentage point. The major European indices closed mostly higher, gains of about 1/3 percentage point in London, Paris, and Frankfurt, slight losses in Milan. The furniture retailer IKEA has been ordered to pay 1.1 million euros in fines and damages after being found guilty of spying on employees and customers in France. The high-profile case focused on a campaign of fraudulent activity by the firm's French unit from 2009 to 2012. Mario Sofas reports.
Convicted by a French court of setting up a system to spy on employees, job applicants and unhappy customers, IKEA has been ordered to pay a fine of 1 million euros. Plaintiff and former employee Adel Amara, who helped expose the wrongdoing, says that while the sum might be a drop in the ocean for the major furniture retailer, it's nonetheless an important ruling for French justice.
In France, it's rare that big companies are convicted like this, so I'm happy. It's true that for IKEA, 1 million euros is nothing at all, but it is symbolic and we must be happy with the French judicial system.
2 former IKEA France executives were convicted, fined and given suspended prison sentences.
It's hard when you get 18 months, but that's how it is.
Defendant Jean-François Paris acknowledged to French judges that hundreds of thousands of euros a year were dedicated to such activities. Of the 13 defendants, some were acquitted and others given suspended sentences. Judges found that between 2009 and 2012, IKEA France used espionage to sift out disgruntled employees, including trade union representatives, as well as to profile dissatisfied customers. It involved the use of private detectives and illegally obtained police files. The court ruled that personal data was obtained by fraudulent means. IKEA France has not decided whether to appeal the court ruling.
A really shocking story there that could continue on.
Okay, Kate Moody with the latest business news. Thank you very much.